Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets of company filings. And today we're looking at Braemar Hotels and Resorts, and let's just say they've got a new deal in the works that might make some of you sleep a little better at night. So what's the big news from Braemar Hotels and Resorts filed on July 28th, 2025? Well, it seems they've managed to extend a pretty important loan for one of their prime properties, the Ritz-Carlton Lake Tahoe. This is the kind of thing that keeps the lights on and the guests happy, and it's good to see them sorting it out. This filing itself is a current report, meaning it's for information that's important enough to tell shareholders right away. Think of it like a company giving you a heads up on something major that just happened. Braemar Hotels and Resorts Inc. is the company in question, and the date we're looking at for this earliest reported event is July 28th, 2025. Now, the company is incorporated in Maryland and they're traded on the New York Stock Exchange. You see their ticker symbols listed here. BHR for their common stock, BHRPB for their Series B preferred stock, and BHRPD for their Series D preferred stock. BHRPD for their Series D preferred stock. These are just the codes you'd use if you were looking them up to buy or sell their shares. The main story here, the real meat of this report, is under the Regulation FD disclosure. Regulation FD, or fair disclosure, basically means that when a company releases important information, they have to make sure everyone gets it at the same time. They can't give a leg up to just a few select people. This filing essentially confirms that Braemar Hotels and Resorts Inc., which they often refer to as the company, has successfully extended a mortgage loan. This loan is tied to their 170-room Ritz-Carlton Lake Tahoe, which sounds like a pretty fancy place. Extending a loan means they've reached an agreement with the lender to push back the date when the full amount of the loan is due. This is crucial because if they couldn't pay it back or extend it, they could be in a really tough spot, potentially even losing the property. So the new final maturity date for this loan is July 15th, 2026. This gives them a bit more breathing room, about a year from the date of this report. But, and there's always a but with loans, this extension is not a done deal for free. It's subject to certain conditions, one of the most important being that they have to keep maintaining a minimum debt service coverage ratio. Let's break down what that means. A debt service coverage ratio, or DSCR, is a calculation used by lenders to see if a company has enough cash flow to cover its loan payments. If their income from the hotel isn't enough to comfortably pay back the loan, this condition might not be met. So while they've gotten an extension, they still need to perform well financially. The terms of the loan also include the spread, which is basically the extra bit of interest they pay on top of a benchmark rate. In this case, it's SOFR, or the secured overnight financing rate, plus 3.25%. SOFR is a common benchmark for short-term interest rates. This spread tells us how much extra risk the lender perceives in this loan. If this number were much higher, it would suggest the lender sees more risk. Now, getting this extension wasn't free. They had to pay an extension fee. This fee was 25 basis points, which is 0.25% of the loan's outstanding principal amount. Think of it as a fee for their bank to say, okay, we'll give you more time. It's a cost of doing business, but it still impacts their cash a bit. One important note here is how this information is being presented. The filing mentions that the information in this specific part is not considered filed in the same way other reports might be. This means it's more of a disclosure to keep everyone informed, but it doesn't usually carry the same legal weight as, say, audited financial statements in a quarterly report. It's a bit of a technicality, but it's there. And finally, the report is signed by Derek S. Eubanks, who is the Chief Financial Officer. Having the CFO sign off on this indicates that it's an official company announcement and they stand by the information being presented. It's a standard part of these filings. So what's the big picture here? Braemar Hotels and Resorts has managed to secure a critical loan extension for a significant property. This is a positive development, showing they can negotiate with lenders and manage their debt maturities. However, the fact that the extension is conditional on their financial performance, specifically their debt service coverage, means they still have work to do to ensure they meet those requirements throughout the new loan term. They've bought themselves time, but they need to keep those hotel revenues flowing and costs in check. The extension fee and the current interest rate are costs that will continue to impact them. It's a step in the right direction, but it's not a solution to all their financial performance, specifically their debt service coverage, means they still have work to do to ensure they meet those requirements throughout the new loan term. They've bought themselves time, but they need to keep those hotel revenues flowing and costs in check. The extension fee and the current interest rate are costs that will continue to impact them. It's a step in the right direction, but it's not a solution to all their financial challenges. They've managed a Alright, that's our breakdown of Braemar Hotels and Resorts' latest filing. What's your take on this loan extension and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.